AAPI educational webinar series. The topic is the one big, beautiful bill and how it affects your financial plan. This is my last webinar as outgoing president, and I really want to thank you, everyone, for the kind support and looking forward to seeing you all at our national convention in Cincinnati from July 24th to 27th. So please do attend the annual convention. AAPI's goal is to educate its members about the importance of financial planning and becoming financially independent. Attendees should consult their own advisors and attorneys for any advice, and AAPI is not liable for any decisions that you make. This webinar will be recorded, and if you want, you will get that from Syed Nishat, Wall Street Alliance Group. And this educational event is hosted by me, which is Satheesh Kathula. And today's guest speaker is Syed Nishat. Syed is a certified financial planner and a certified plan fiduciary advisor. His articles and interviews about asset protection and common financial mistakes by physicians are published in MedPage Today and Medscape. He's regularly quoted and interviewed in media outlets like Forbes, Kevin MD, US News, Investment News, and Yahoo Finance. And this is a short webinar that addresses the one big, beautiful bill by President Trump. So we would like to make it more audience interactive, not a long, boring presentation. I'll ask some questions to Nishat, and he will answer. You can ask your questions as well in the chat box. Again, please ask your questions in the chat box, and we'll try to answer them as much as possible. And let me start, Nishat, and I really thank you for coming today to educate us. So before we start speaking about the big, beautiful bill, a lot of AAPI members are senior citizens, and they ask if there's any way to lower their RMD.
Yeah, thank you, Dr. Kathula. Really appreciate it, and thank you for all you did for AAPI. You will have your life back. Your wife will have you back. No more, crazy hours. I don't know how you do it, and I really appreciate you doing it in a very short period of time. The bill passed, and we discussed, and you want to help your members. I really appreciate what you're doing, and hopefully, good luck in your convention. We're looking forward to seeing you in July.
Thank you.
Now, so going back to the big, beautiful bill, and before that, you asked one question, some lighter topic. I'm going to start sharing my slide. A lot of AAPI members, they are close to retiree, and they ask this question all the time that, hey, I do have to worry about paying a lot of taxes. I am close to retirement or RMD. What can I do? All right, so just some lighter topic. There are a few options out there. Like if you're over the age of 73, there's something called RMD, or required minimum distribution. What is it? Every year after the age of 73, you do have to start taking some money, which come out to be around 4% of the last year's value of your retirement account pre-tax. You do have to take RMD, required minimum distribution. But some people have 5 million, 6 million, 10 million. It's a lot. What can we do? Few things you can do. Number one, if you are lucky enough to have your spouse 10 years younger than you, then what you can do, you don't have to take 4% required minimum distribution. It will be table 2, which is the joint table. The amount is very less. Again, if your spouse is younger than you, 10 years, then don't have to take 4% less. One thing. Number two, think about something called, when they do charity, instead of writing a check to charity from the retirement account, let's say you want to give money to AAPI, you want to help Dr. Kathula, don't give a check, give from your retirement account directly. What happened is called QCD, up to about $100,000. You can give directly check to AAPI. The money never came to your hand, so don't have to worry about Medicare taxes. That's fairly important. And lastly, you can do something called a Roth conversion. Roth conversion means you can convert the money into a Roth IRA. And once you convert it, the money becomes Roth IRA. It grows tax-free. There is no RMD in Roth IRA, and withdrawal is also tax-free. But you might be saying, Nishad, you just told me Roth IRA, I have to pay a lot of taxes. It doesn't make sense. Yeah, you need to be a lower tax bracket. The market should be down, do it. But if you're charity-minded, at that time I'm saying it, what you can do if you do a Roth conversion, you can do something called charitable lead trust. This is something a lot of high net worth AAPI members or physician, It's called charitable lead trust, charity minded, but they don't want to give the money to charity right away. How does it work? In a charitable lead trust, let's say you can contribute $100,000, you get the full deduction about $100,000. You don't have to give charity 100,000, 1 million right away. Just say you put 1 million, you don't have to give 1 million right away. The amount is 5% of the charitable lead trust every year. 5% of 1 million is almost about $50,000 every year you must give it. Now, in 20 years, you have to give all the money to charity. 5% in 20 years, all the money to charity. Now, Dr. Kathula, you can invest the money, SPY, QQQ, the charitable lead trust. The return usually is about 10% per year. The delta, more than 5%, goes back to your family tax-free after 20 years. So $1 million you can convert from a Roth IRA. The same time, $1 million you can put it into the charitable lead trust. Net is negate the taxes and the money your family gets tax-free, and you have convert the money as well to a Roth. So again, it's a decouple with a Roth conversion to charitable lead trust. If you're charity minded, a lot of people do that. They don't need the money. You can think about doing it. And lastly, there's something called qualified. It's an annuity trust. You can actually just buy it. It's called QLAC. It's not that powerful. I don't like annuity, but if you want to defer it until the age of 85, you can think about buying this QLAC every year, about $200,000. You can defer the taxes. I'm not too big fan about it, but I just want to put it out there. So again, QCD, Roth conversion, combined with charitable lead trust. And if your spouse is younger than you can use a different table. These are a few of the things you can think about doing it. Hope it makes sense.
Thank you for that, Syed. So, going back to the big, beautiful bill, can you please give us what is the purpose of this bill and who benefits the most from it?
Yeah. So before I go to the detail, like you're going to ask me, I think, some more question, I just want to talk about the highlights of the Big Beautiful. Let's take a step back. What is the purpose of the Big Beautiful bill? So when Donald Trump was a president, at 2017, 18, he passed the Tax Job Cat, Tax and Job Act. That's the law. It's called TCGX, the law he passed. This is an upgrade version of that bill. Is called Trump 2.0, or the Big Beautiful Bill is extension of it. If you remember, the Donald Trump is talking about bringing the manufacturing down in America, more NVIDIA, everyone, bring back the job here. The bill, and as you see, I go through it, designed in such a way as a spirit of entrepreneurship, just to let you know, as a spirit of entrepreneurship. Corporation get the biggest benefit. Individual gets as well. But to be honest with you, Dr. Kathula, the biggest benefit will be if somehow AAPI members or physician become 1099 income, locum. You will get the maximum benefit possible. If you're W-2, you were kind of screwed before, you're still screwed now. There's nothing much you can do. There's something you can do, but to be honest with you, 1099 really, really helps if you can do it, because a lot of provision from big corporation funnels through S corporation as well. So again, the winners are going to be the big corporation, more entrepreneurship people. The losers is going to be EV sector. Those will be loser. A lot of physicians see Medicaid patient. They will be losing money because a lot of patients are getting off of Medicaid, and hospitals will be losing money. And then unfortunately, some people who are lower income, they'll be also suffering as well. So again, the whole presentation I designed in such a way that how much income you need to have to benefit for your taxes. And if you can have a 1099 income, it will really, really help you. And try to invest some money into real estate if it's possible. And I'll just more as I'm progressing to the presentation, I'll try to summarize it for you.
So it looks like for healthcare people, this bill is not so great, especially those who are employed by hospitals. If they have a private practice, probably they have some benefit, as you said, 1099, but for W-2, this is not a good news.
W-2, there is some, but what happens is an individual level, and if your income is down a little bit, if you can bring it down, and I will just say from individual basis, how can it help you? And I'll show it. And this is a good segue. And this webinar is recorded, and the screen is there. Hopefully, people kind of log in, and I don't know, they can take a picture of this. But the recording will be available, they can somehow can use this screenshot as maybe um, a starting point to start having conversation with their CPA and financial advisor and see where do they fit in, because there's some wiggle room there for the W-2 for senior citizen. It is there, but the biggest advantage, the tax advantage, are for 1099, and I'll show you why. And just to show you, how individual get benefit, just to start the conversation. So individuals, what happen if your income is below $500,000, you're in a sweet spot. Again, the income below 500,000, you're in a sweet spot. Over $500,000, a lot of benefit does go away like salt, and I will talk about it in a little bit for W2. But this is a good screenshot. I will let it be there for a little bit. People can just take a screenshot or picture and start speaking to your CPA as a starting point. And then, you can ask the next question and I can try to answer for the estate planning, I guess.
Yeah, go ahead. So how this bill affects estate planning, Syed, could you elaborate on that, please?
Yeah. So estate planning, how does it work? As of right now, that a husband and wife both pass away in America, there's something called estate tax or death tax, which is about 28 million. Again, husband and wife both pass away, anything $28 million, you have to worry about paying state tax. It's about to expire this year in December, okay? Next year, it's about from January sunsetting. That means it's expiring, is going it down. But this new bill, big beautiful bill, they extended it. Not only extended it, they have increased the limit from 28 million. I'm just going to switch my slide. Hopefully people took some notes here. To 15 million each, up to $30 million. There's no estate tax. So most of the physicians don't have to worry about the state tax for a while. So, and then this estate tax exemption every year goes up, inflation adjusted. And this change is not for like 1 or 2 years. It's permanent, as if it needs to be changed, the Congress has to vote again, like the way the all vote went through, right? The big beautiful bill, there needs to be vote again. It's not like only for 1 year, 2 year, then sunset. Now, how does it play into state taxes and state planning? We still recommend, if you get a will done, if you have a retirement account in house, I think will power of attorney is okay, and have beneficiary designation there. And in this way, what happened then? Then it will avoid all the probate. Just a retirement account and house will do it. Will. If you have a retirement account, house, brokerage account, couple of properties, we believe have a revocable trust as well. Remember the benefit of a revocable trust, it avoid probates, divorce protection for children, and step up in cost basis. That means, let's say you bought NVIDIA at $5, stock is $10, you die, the children inherit the money to a trust, their new cost is $10. Irrevocable trust, Dr. Kathula, unless your net worth more than 30 million, you don't have to worry about state taxes too much. But if your net worth is still high, you want to gift it. Remember, when you have an irrevocable trust, if you gift it, the step up cost goes away. What happened that you buy NVIDIA $5, like I explained, you gift it, the children's cost will be $5. But the problem is that the Kathula market is record high. You can see it yesterday. You have been talking. So gifting doesn't make sense right now. You should wait, let the market drop. If the market drop like this year, April, March, thinking about gifting at that time, if you really want to gift using spousal lifetime access trust. So again, let me just summarize. Revocable trust makes sense. Irrevocable trust, don't have to worry about right now. You can wait for the market to drop. They can start thinking about gifting. Hope it makes sense.
Yeah. So thank you, Nishat. How does this impact the tax planning as an individual in this bill?
Yeah. So now let's go back to individual. Like you mentioned, W-2 seems like nothing much we can do. You can, depending on your income. All right. But unfortunately, physician, unless you don't work much, everyone makes more than $500,000. Maybe some motivation don't work too much. Work a little bit less, enjoy life a bit, because $500,000 is decent. Like for example, how does it work? So like if you remember, when Donald Trump was president, the state and local tax was 10,000, a maximum cap, if you remember. So that have increased from 10,000 to 40,000 state and local tax, as long as your adjusted gross income below 500,000 joint. So this is good for Florida residents, because property tax, they have to pay a lot. Ohio, I think you have a good property tax too.
Yeah.
So it does help. Over time, these are helpful depending on your income. Again, the income is the main threshold. Over time, like nurse practitioner, physicians, if your income up to a certain extent, what happened that over time, you get some deduction. There was some misconception people have that you pay no taxes, but it's a deduction. We'll talk about it next slides. And then social and senior citizens, what happened if your income below certain level, you have more deduction is there. And also depending on your income, if you buy a car made in America, you get $10,000 deduction interest as well for a car. That's very powerful. Individually, how else does it help? Education plan. There's something called Trump account. You must have heard about it. What is that? I was talking to my wife yesterday. I got two young kids. I'm an old father, and my wife was like jumping up and down. We should have a couple of more kids because if you're newborn, this year until 2028, government is giving you $1,000. $1,000 Trump is giving you. It's called Trump account. You put the money. It's called seed money. All right. The newborn is for only newborn, and is almost like a IRA account, and the money grows until the age of 18. You cannot take the money out without paying penalty, and but there are exceptions there as well. And the money can be used for a variety of reasons, like buying first-time house, almost like an IRA account. There's some, a more details to it with treasuries are giving direction, but it is a tax deferred, extremely powerful. You on top of it can contribute $5,000 in it too. For $5,000, it doesn't have to be newborn. As long as the child is before 18, below 18, you can do 5,000. It is on top of 5 to 9 and everything. Okay, $5,000 you can put it in. As a CFP, I really like it because it really teaches early education. Early, you're starting off in it. So if you have grandchildren, you can put money in. If you are employer for employee, you can contribute $2,500 as well. It is not part of their income. Again, extremely powerful as an individual. It is good. So it's good to, if you have a newborn, the $1,000 the government is giving you, very powerful. Number two, 5 to 9 accounts. As an individual, it helps. What happened 5 to 9 for private school? The max supposed to be 10, it becomes 20,000, which I think is decent. You can use it. The 5 to 9 doesn't only have to be used for higher education. Dr. Kathula, you are FACP, you have, I'm thinking CME and stuff like that. Renew it. You can use it for those as well. On the job training, you can use 5 to 9 for yourself as well. So again, those are also very powerful. So 5 to 9 becomes very popular as well. So these are some individual as a level. It can help you, but again, the sweet spot, try to have below 500,000 income. Even W2, Dr. Kathula, there are some rules out there, like charity, real estate investment, depreciation you can do. It's not the end of the world, but if you have 1099, it's easily to show expenses to bring the income down to below 500. So that's why if you can have some 1099 income, it is very powerful.
Okay, great. So the 1,000 thing for newborn, it doesn't really matter what income group they are in.
Correct. Newborn, American citizens.
Any American citizen.
Correct.
Okay, good. So if you're self-employed, how to incorporate this bill in tax planning?
Yeah. So so I will talk about the corporation. The big corporation, how it's thought up to individual. So hopefully it's not too academic, but I am academic, like to talk. So if it becomes too lengthy, hopefully people don't get bored. So what happened that the whole idea is like Apple, Google, Nvidia come to America and develop product here because I understand American labor is expensive, Donald Trump, but he's saying you'll get more write-off. The write-off is basically caused something called bonus depreciation. It was ending this year. What does bonus depreciation means? Let's say, Dr. Kathula, you buy a car weigh more than 6,000 pounds. This year, before the bill was issued, you can only write off 40% of the value of the car. Car weigh more than 6,000 pounds. Let's say car is 100,000. The max you can write off 40% of the value of the car. Bonus depreciation was only 40. They are making it retroactively at the beginning of the year, almost January 19. They're saying it 100% deduction. Again, I'm not saying go ahead and buy a Maserati or a Rolls Royce, but what I'm saying that if you need a car like a big 6,000 pound car, then go ahead and do so because you can get full write-off from, and you can enjoy the car as well. Number two, that if you have a machineries, everything you're buying it, definitely do so. You can get a full write-off, bonus depreciations and everything. And this is here, Dr. Katula, you might be saying, hey, beside car, how does it translate into a small corporation? It does. So let's say, Dr. Katula, a real example, you are 1099 income. You have it. You can open up an S corporation, a 1099. Let's say your income is $500,000, and you see inpatient, patient comes to your office with a $500,000 income. My recommendation at that time, you basically uh, own your own office, buy real estate in Ohio. Your area is not that expensive. Let's say you buy a house and start paying a rent. Let's say you buy a office for $1 million. I'm giving an example for $1 million. $1 million, you can do advanced depreciation for $1 million for property. Advanced depreciation for $1 million, you can get 300,000 negative balance immediately. You pay yourself a rent over here from the S corporation. But since that building is negative 300,000 because of advanced depreciation, you will pay no taxes. Again, extremely powerful. Big corporations are doing it. That's why, as I said, for API members, physician, if you can wear a hat of an entrepreneur and do this kind of stuff where you have more 1099, but negotiate in such a way with the hospital, they pay your malpractice. Otherwise, you lose money. Then those are lose money. They pay your malpractice, they pay your health insurance, negotiate with them, and they give you a 1099 if it's possible. That 1099, you open up an S corporation, buy a building to see patient, do advanced depreciation, buy a car under the name of the corporation, get the full write-off. Net, the tax is extremely, extremely low. You can do a defined benefit plan, a lot of good things. So again, just to give you a gist of it, how powerful it can be used for business. Number two, this is for dentists. All right. So API member, hopefully some dentists are there.
Yes.
Dentist, what happened? The R&D tax credit, like a lot of machineries. So I went for my filling. I see that the doctor bought like a big dentist. R&D tax credit that improves people's life. If you can just do that, you get a payroll deduction, a decent amount as well. But the R&D tax credit, it become retroactively very powerful. Again, it is there for the dentist, and if you have your own product. Pass-through corporation. I see a question there, and I think it's a good way to answer as well. So let's say, Dr. Kathula, you owe a lot of state tax. Only about 30 states in America, let's say New York also, one of those states. Like I owe a lot of state tax, but my income, let's say $1 million. So, remember, so that means I don't qualify for the 40,000, right? But I do have my own corporation. If I do have it, the state PTET is still there. How does it work? So you elect to say the state tax from the corporation. You choose to elect to pay the state tax from the corporation. By December, you have to pay all of it. You get write-off federally. Again, that is still there. Someone asked the question, 30 states adopted the law, is still there. All right. So if your income is high, if you have 1099 income, S corporation, PTT is still there. PTT is not available for single person. It needs to be like a multi-member S corporation. Those needs to be there. And then Section 179. Section 179 deduction, the max used to be 2.5 million. It increased to 4 million. Again, expenses, a lot of deduction can be possible. So if it's possible, again, for the physician, try to have self-employed income. It helps a lot.
Yeah, the Social Security. I mean, I heard there is no tax of Social Security, in this bill. Is that right?
Yeah, I think there's a misunderstanding. People have it. I think there's an email went off, then Social Security, you pay no taxes. It's not true. So I think senior citizens, it is a good idea as well to talk about it. So what happened that if you over the age of 65, then the standard deduction you have it, you get $6,000 more deduction. That's it though. I mean, so what happened then if and your income is below 150, what happened? You get this additional $6,000 standard deduction out there. So it helps to mitigate the Social Security tax. But the email went down from Social Security, which is kind of misleading uh, because it's not everything free. What happened, you get more deduction. So you can get to write off as a standard deduction plus $6,000 additional deduction if your income is below 150. That will help in your Social Security taxes. That's it. So hopefully people understand it.
So I also heard that the $7,500 tax credit is going away on electric cars from September.
Yeah, so if you need a car, before that, buy it.
Yes,
That's why I think Elon Musk is form his own party, right? So yeah, that's going away. That's EV sector is the biggest loser here.
exactly.
Yep.
So what about the no? I have heard no tax on overtime and tips in this bill. How does that work?
Yeah. So again, that's another misconception. There's no tax. It doesn't, it's a more deduction. Okay. It's above the line deduction, like 1040 when you file your taxes. Above the line deduction, you can write it. How does it work? So I'm going to talk about, let's say you, because you're a physician, you hired a nurse practitioner. I'm just giving an example. Nurse practitioner earned, let's say, $80,000. And then what happened is subject to income limit, obviously, earn $80,000, and over time that person earned 20,000. What happened on the $20,000, I'm hovering my mouse, that person above the line limit can deduct 12,500 above the line when filing for the taxes. So it's 20,000 over time, 12,500, pay no taxes. But anything more than that, obviously part of the income. All right, so that helps. If you are into service industry, business, that's separate on top of it. So what happened that if you go to a server and everyone subject to limit, and these are for 3 years, by the way, the senior citizen 3 years, this is 3 years also. What happened if tips and everything you receive, it needs to be a service industry, restaurant, up to $25,000 you can write off from 1040 above the line. So it never comes in. You got your income, but above the line you deduct it. So hopefully it makes sense. But it really helps a lot. It does. I'm saying it, but the way it has been advertised or said that no taxes, I think is erroneous.
Hmm. Okay. So, I mean, there is a lot of criticism about the bill, like any other bill. So, what's your take on this bill?
Yeah. So as I said, the biggest criticism, the biggest benefit of this bill, are people who are, as I mentioned, rich are getting a little bit more richer, and then people who are self-employed have their own business and using leverage, they really get the most benefit off of it. Because if you see that all the things I've said so far, it's about deduction, 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 right? And then you got to be in the middle somewhere to get benefit from it. But then what's happening that people whose income is below 30, I'm just giving, they get like really minimum any benefit off of it. And then a lot of people are getting off of SNAP program. That's a big issue. A lot of people are, in order to qualify for Medicaid, it is becoming very tough. A lot of getting of the Medicaid, and then a lot of student loans are going away. Also, so because the way the bill is designed, that okay, I'm going to spend money somewhere. I'm going to cut some taxes for the corporation, but where do I save money? This is where they're saving money, and a huge amount are going into the Department of Homeland Security, like the border control, military budgeting. The huge money is going there. So, but they have to cut money somewhere. But I would say that unfortunately, people who are lower income, they are getting hit the most. The way I see it, at least. So that's why it is very important. Don't wait for something to hit you. My suggestion will be that use the bill in such a way, which is entrepreneurship. Try to open up your business so you can use this bill in such a way. And also, the whole idea about this bill, Dr. Kathula, is it will create a lot of jobs. Like foreign companies will come to America, more R&D will happen, more hiring will happen. So in this way, the GDP grows, but GDP may not grow. People like if you see Apple, Microsoft recently lay off 9,000 people. Even AI, they're making the highest profitable. They may not hire more people, so it may not be possible to do it. But they're betting on the fact, and there is a projection the deficit will be going higher, actually, not lower. So the question would be, Was it really necessary to do it? So that's the argument. It's not really necessary to do it because the market is already so good, doing it good. But it does, since the bill is there, my recommendation, again, that screen is in front of you. I'm again showing it to repeat one more time that if your income is below 500,000, you can qualify for SALT. Number two, Trump account, it will be helpful. State tax exemption, rich people, more richer. Senior people, $6,000. You get additional deduction per person though. Then bonus depreciation for car if you have your own business. Then auto loan deductions, those are there. QBI, qualified business income deduction, those are there if you have your own corporation. But again, it is highly, highly designed for leverage and self-employed people and more corporation mind.
Okay. So that's wonderful, Syed. So we have some questions. So you want to go to questions, or you want to summarize the highlights of the bill? You just did, actually.
Yes,
So
I just did. Yes, highlighted the bill, but again, the whole idea is of this bill is that state taxes it does affect, and we will read through some of the question the audience have it. State taxes does affect. Try to invest into opportunity zone. Again, from an investment point of view, opportunity zone. A lot of API member ask, where do I buy opportunity zone properties? There's a website called loopnet.com, LOOPNET.com. Go there, look for opportunity zone. Opportunity zone has been extended. If you hold it for 10 years, no taxes, and you can tax deferred as well. Opportunity zone is very, very important. Those are there. Bigger car deductions are there. Equipment deductions are there. QBI, those are there. And Salt Lake workaround for S corporation, those are also there. So this is in a summary, but take um, this screen in front of you, print it, and speak to your financial advisor which one makes sense for you.
and we'll also send this recording. Whoever attended the meeting, they will get the email with the recording. Also, it will be on API website, APIUSA.org, under 2024, 2025 webinars. So you can look up later too. But yeah, screenshot is a good idea. This is a very nice slide which summarizes everything. Thank you, Nishat, for doing that. So let's go to the questions. Is PTET still a good option with 40K SAL cap?
Yeah, remember I spoke about the small business, a small corporation. The 30 states adopted those. New York, New Jersey, Virginia, those are the states. So PTET, you can still elect to pay the state tax on the corporation. Those are still applicable.
Okay. So another question, can the employer contribute 2,500 to the Trump account on top of 5,000 contributed by the parents?
Yeah, so as of right now, the Treasury, we are looking for guidance. As of right now, the word has been used that $2,500 employee can contribute as well. So the commingle, like on top of the 5,000, does it affect? As of right now, the answer is yes. But as more clarity coming in, we'll be keeping you posted.
Okay. So question from Utpal, what if you have both W-2 and 1099 income? How does the 500K limit work?
Yes, sir. It's adjusted gross income, unfortunately, it's combined. So in this situation, try to go for more 1099 if you can, less W2. Max out the 401k there up to amount that you're getting the match, and try to do in your 1099 all the stuff I spoke about. Buy, if you see patient, buy an office. Regardless, buy real estate. I know I'm a CFP, but still I'm recommending API members be a Gujarati, like within us. Because Gujarati people invest into real estate. There's a reason for that because of depreciation. It can write off. Cost segregation is very important. You can get to write off rental income, other passive income as well. Very, very powerful. So more 1099 combined with cost segregation, charitable lead trust, it will really, really lower your income.
So can you buy two vehicles and still use the bonus depreciation?
You can, yeah, I mean, obviously, the more you buy, the more is the IRS audit. It has to be for business reason. If you can justify it, all good.
Mhm. Okay. Any benefits about real estate buying, selling, or renting?
Yes, remember, it's a huge, huge benefit. Real estate you can buy and sell. There's something called 1031 exchange you can do, and you can defer the taxes, and you can rent it. So how does renting works? So what happened, as I explained in cost segregation, let's say you buy a building for $1 million, you can do advanced depreciation. The cost basis goes down if you do advanced depreciation. But what happened, let's say an LLC owned the business, the building, the LLC become negative. The rental income you collect, LLC negative, write this off. So it's called, it will be like Schedule E will be negative, net will be you pay no taxes. I see a question, what about depreciation recapture? Yes. If you're buying and selling it in a short period of time, cost segregation does not make sense. You have to hold it for long term. But what's the solution? The solution is as long as you do a 1031 exchange, you can defer the taxes. That's still okay.
Yeah. So is it advisable to change from C to S corporation based on the benefits?
Yeah, so on C to S corporation, what happened that you have to worry about cost basis. What's the cost basis of the company when you convert it? You cannot just convert like what happened every time you put money, you earn money of the company in America, there's a cost getting created every time money comes in. So what happened then in a C corporation or S corporation, anytime you convert it, there might be some taxes due if the company makes money. So it's not something that you can just immediately convert it. You have to speak to the CPA. You do have to elect first S corporation, maybe have to take a special distribution, don't do, and then you have to do it. It's not very simple. People have this issue converting from C to S corporation. The issue is the stock cost basis.
So there are other questions. How does this affect physician jobs in academics who are in academic institutions?
Yeah, so what happened that academic institution, I mean, you're professor type, most likely you're fine. It should not affect you too much. I mean, you're same W-2, but try to have W-2 in such a way that your income is below 500, then, and if the property tax is there, then you can get the solved workaround depending on the state you live in. That will be someone helpful.
Okay. So, is it possible to take advantage of EV credit and the 6,000 pounds car purchase?
Yeah,
If it's
it's
not your
usually
vehicle, let's say, and it is 6,000 pounds, can you take the advantage of both?
right. If you have your own corporation, you can. And EV credit, remember, EV credit is mainly, there's an income limit as well and the state limit as well, right? Both are there. So yeah, the 6,000 pound, remember, it needs to be under a corporation, though. It's not like individual you buy it and keep driving it. It needs to be for company use. But yes, you can.
Okay. So, is there a limit on the dollar amount that you can bring in with you from India? I mean, I don't know whether that's
Yeah, I think there's a cap for it. There's a million, there's a cap for it. I just have to take a look, but there's a cap for it. How much you can. So one of my clients is actually selling properties, ancestral properties, huge properties in Kerala area. I've been selling it, bringing it, but there's a cap how much you can bring it.
yeah.
Number one. And number two, you do, so you file something called FBAR filing. You have to do every year. If you have overseas property, you put cost there. What is the cost you bought it? So when you anytime you bring money more than 5,000, basically you have bank will ask you, okay, what's the cost basis and how much gain loss? If you have paid the taxes India, you're good to go. But if it's a net loss, you're fine. You have to pay no taxes. But if it's a gain, you have to pay no taxes there. Obviously you have to pay capital gain here.
Okay. Any changes that you see in HSA accounts in this bill?
Yes, so HSA account, the nuisance are there. For example, HSA account, more flexibility coming into play. The reason why we didn't add this in because it is not that powerful. For example, uh, before the bill got finalized, one of the provision were very good that over the age of 65, you can still open up an HSA account if you're still in Medicare. But then we are looking at the 1100-page document. We don't see the bill, the line anymore. So we were like, okay, where did it go? So if I got more clarity, we'll email it to you that can you still open a HSA account? if the bill said it, but the bill did mention that HSA, you have more flexibility, money can be used for different purposes, though more flexibility has come into play, but nothing powerful. The more powerful would have been if they say that, yes, you can contribute into the HSA, but we'll keep you posted as we get more clarity.
Okay, great. So medical students had loan relief working in nonprofit entities, including residency. What happens to that in this new bill?
Yeah, unfortunately, those are there, but those are becoming fairly restricted. And there's a huge page document. We'll email it to you guys about that. But this is one of this Pell Grant role, Graham loan. Those are the loan, unfortunately, become very, very strict. Uh, but these are the bad part about the bill that is becoming fairly restricted, and you have to pay this off and stuff like that. But we just got more clarity about this bill. But today we are talking about the highlights about it. There's a good article has been emailed by white coat investors. This is something people should take a look. White coat investors, and we are looking into it. Maybe Dr. Kathula for the YPS for young physician, we should have a webinar separately and go
Sure.
through all the nifty detail because it's very detail oriented.
Gotcha. Thank you.
Yeah.
Question from Uday here in math. Does routing more money to a PLLC make more sense now?
Yeah, routing probably means go through PLLC makes more sense, right? Through individual. So basically, one of the biggest mistakes RP members make, if you're a locum, you do everything sole proprietorship, like no LLC. I mean, you can get all the deduction if you want, but that's not clean. The cleanest way is PLLC or LLC or S corporation, where you can have receipts of everything. Because then through PLLC, you get QBI, qualified business income deduction. You can buy, for example, you can actually employ your children over the age of 14, depending on the state you live in, pay them some money, open up a Roth IRA for them. You can do a defined benefit for them. So a lot of things, if you route the money through a corporation, you can have deductions, and it's very clean and very powerful. Yes.
Okay. Is there any limitation on numbers of 1099 we as a practice can employ? Dr. Vinod Verma's question.
Yeah, you can. So remember, in order to qualify for 1099 employee, there's a five criteria needs to be met. What happened that the problem is if you if you hire the employees, you're supposed to be matching the 6% you pay, 6% they pay. If 1099, what happened, you don't pay any of this, they pay all. So the IRS restriction got to be there though. For example, they need to have their business card, they need to have their own hours and stuff like that. So make sure you speak to your CPA that the employees qualify for 1099. But there's no limits like this, but make sure they qualify for it though.
Oh, so what about the solar panels? There is still some incentive before
Yeah,
this.
that's also expired. Yeah, that's also going away. Solar panels. That's why Elon Musk is very pissed, unfortunately. Yep.
Yeah, the whole electric thing is going away.
Yeah.
Okay. So any way to lower tax for employed physicians on W-2?
Yeah, unfortunately, that was before the bill, same situation. After the bill, same situation. Nothing much.
Nothing new. Okay.
Yeah.
So is the 500 contribution to Trump account is before tax or after tax? This is
Post-tax.
from Dr.
Post-tax.
Bandaru.
Post-tax.
Post-tax. Okay. How is this bill even ethical? So disgusting to support the wealthy and screw the poor. Just saying because I know a lot of people who have voted for Trump and maybe, well, it's a personal opinion, so let's not get into that. Again, Dr. Vinod Verma's question, can you please talk about the deduction numbers in dollars?
Um, Deduction numbers in dollars. I'm not sure what it means. But I guess, yeah, I'm not sure what this is, a blanket question. I'm not sure what it means, but I'm
Yeah,
assuming
I
that,
mean,
yeah,
Dr. Verma, you can type in again just a little bit more in detail, explaining what your question is.
yeah,
And Dr. Prabhu Shivalingappa, can you still do the gifting of 19,000 to your kids?
those are there, still there.
Okay,
Yeah.
wonderful.
And
Well,
then,
that
also
we
one
need to
thing I
finish
recommend,
off.
one thing I'm recommending, what of a lot of RP members not aware of this question, the $19,000 you can gift it to your children, your grandchildren. But if you're high net worth, if your children is going to private school, grandchildren, you can pay directly to the school. This is on top of the 19,000.
Okay.
So
So
it's
does
very
it have
powerful.
to be family or you can gift that to anybody?
You can gift it to me. Yeah, no
Okay.
problem. Yeah.
Yeah. All right. And does the bill affect getting a new job since hospitals are losing money? How to increase the chances to be hired?
I think this is your area, Dr. Satheesh Kathula. You did a lot of good webinars about how to get residency and everything like
Sure,
that, like
sure.
that.
Yeah, yeah.
Yes.
So
Yep.
I mean, hospitals are losing money, I know, but um, it's probably it's every hospital is different, every system is different, I guess. But it's a challenge for sure. So Sujata Kailas, her question is the gift of 19,000 cannot deduct from income?
No, it's just a post-tax money. The money is out of your
Post-tax money.
state, and then what happened is that the money is out of your state, and any growth happen, there's no state tax on it.
So Sudeep has a question. Can you please explain a little more on the 19K gift? How does that bring the taxes down?
It doesn't. 19,000, it just bring your state down, state
Okay.
taxes. So what happened? Anything more than 30 million, you have to worry about paying state taxes. But the government allow you to put 19,000 out of your state to give to the children. So if you have like, let's say 5 children, almost 100,000 will be out of your state every year.
Okay. So Dr. Ravi Kohli has a question. Is there any deductibility for early childcare expenses?
Yes, there is. Depending on your income, a portion of that you can get to write off from your expenses. Correct. There is.
Okay.
Correct.
So I think we are pretty much covered with the questions. Any questions from the audience? You can type in the chat box. This is very useful, Syed. I mean, wonderful. Everybody's wondering what this bill is. Like any bill, there are good things, there are bad things, and I'm really glad that you came on today and explained everybody. Um,
Yes. Yes.
and yeah, so and then is there any benefit to the employer for overtime pay?
Yes, the employer for overtime pay, depending on your income, there's a cap though. Just double check the cap, 150, 250, the income limit, just double check it. What happened that the overtime that you collect, yeah, that you can deduct. Let me just go back. How much is it? So the deduction amount is 12,500 above the line income. You can deduct it from your 1040. All right. So if you're a less than nurse practitioner making $80,000, there's a cap to it, how much the income gotta be. Let's say you make 20,000 overpayment overtime, then what happened from the 20,000, you can deduct 12,500 above the item, if it makes sense.
Yeah.
Yeah,
So another question, 6,000 deduction for seniors is the income limit to 150,000?
correct.
Yeah, okay. Well, the Dr. Ramreddy's Porsche can qualify for 100% deduction. Again, it depends on how much. I mean, if it is more than 6,000 pounds, yes. But if it is less than that, maybe not, right?
Right. So I think this
So,
probably is joking. Yeah. Right. All right.
so you mentioned some deductions in pounded, which I could not figure out in dollars. That's Dr. Binod Verma. Also, you mentioned about 100,000 reduction for buying U.S. manufactured cars. Can you please explain if it is part of 40,000 standard deduction?
No, so we're talking about that if you say buy car way more than six, this is for S corporation, for your own company I'm talking about. So let's say you have your own corporation, you take W2 and you take K1 as well. K1 is basically a bonus. You're taking it as a distribution, subject to tax. But before taking K1, you can get to write off a lot of expenses as well. So let's say I'm giving an example. You have equipment. The bonus depreciation this year at the beginning was 40% if
Mm.
you have equipment, 40% only. Donald Trump said that retroactively from January 9th, 19, it is 100%. So let's say you buy an equipment, 100% you can get to write off. Let's say The value is $100,000. Before the bill supposed to be 40% of that, 40,000. Now is all 100,000. So that's why I was recommending if you can be self-employed, have other machineries, equipments, have an office for yourself, cost segregation, you can get to write off a lot of money from depreciation.
So, Dr. Division Mahapatra from Huntsville, Alabama, any benefit for C Corp in medical practice?
No. So C Corp medical practice, usually if you qualify for QSBS, qualified small business basically means if you qualify for it, if the total revenue is below $50 million, if a takeover happen, but again, you have to qualify for it. Again, make sure you speak to your CPA. If a takeover happen up to 10 million, basically there's no taxes in a C corporation. That increased to 15 million right now. But again, a takeover happened. Like if you're into the like a venture capital, you have your own software and medical industry if you qualify for it. If you don't have any of those, if you don't qualify for it, then C corporation does not make sense because you have to pay double taxation. So in your situation, S corporation is better to have it.
So, one more question. The gift amount is per donor. So, if both parents give, could it be 38,000?
Correct.
Dr. Anil Gupta's. Yeah.
Per child. So if two child, 38 each.
Okay. Okay. So, Dr. Sudeep, what about bonus depreciation for LLC and the interest for the car?
Yeah, so bonus depreciation, remember, so this is very technical. The slide, you can see it. When you have the interest for the car and bonus depreciation, depending on the income you have it, the interest before, the way you're supposed to write it before the bill is you have to earning before taxes, then you do the depreciations and everything, then the interest. After the bill, what happened is before the depreciation, before the earning before taxes, you can get to write off from there, which is extremely basically powerful. So yes, it does help you depending on how much income you're making. But remember, for car deduction individually, the the max you can do is $10,000, but you need to have lower income individually. It needs to use for corporation. That it should be okay depending on the corporation type.
Okay. So, can we deduct 100% retro for last year also? It's Dr. Meenu Gupta's question.
Well, remember, if so, this is 100% retroactively last 3 years. That they are talking about the. Let me just go back to my slide. Research and development tax credit, R&D tax credit. That's something basically you can go as going back 2022, last 3 years. So I think it might not be possible for S corporation like go back, company become negative, like going back and try to deduct it. That may not be possible. It's only for R&D tax credit. All right. But if it's more complex, you can sit down with us or your CPA and we can take a look given your situation.
So, question from Suman, is there a benefit buying a residential rental property?
It is, yes, a lot advantage, as I said, but try to buy it close to 900 to a million. Number one, you get rental income. Number two, you get depreciation. Because of depreciation, you pay no taxes or very less taxes. So extremely powerful. And it's a hard money, not a digital money like stock market, right? So yes, I highly recommend a good 30 to 40% of your net worth should be into real estate.
So wonderful. I think we caught up with all the questions, Nishad. So great. I mean, you have done a wonderful job. Thank you so much for your time.
Sure.
And this is very, very useful, including me, because I don't know too much about this bill, but it's really enlightening, educational, and yeah, I thank you for that and your team too. So
Yeah,
again, I
thanks.
just want to, yeah, go ahead, sorry.
No, thank you. I really appreciate it, Dr. Kathula, what you doing. Thank you.
Anytime, anytime. Just want to remind everybody about the Cincinnati Convention, annual convention from July 24th to 27th. And Dr. Chakravarti recently took over as the president of AAPI, and he'll be conducting a couple of events. I just want to announce on his behalf. One is Patagonia trip in October, and then India Independence Day Parade in New York. So please attend those two if you can. So thank you so much for attending, everybody. Thank you, Syed.
Thank
So
you,
that's
Dr. Kathula. We will miss you as a president. Thank you very much. What you do for
I'll
AAPI.
be around. Yeah, when you need something, let me know.
All right. Thank
I can
you.
come as a host.
All right.
I learned. Thank
Okay.
you.
Take care. Bye bye.